Our economy is strong as hell. The internals are. Inflation is worldwide. It's worse off everywhere else than it is in the United States.
Silicon Valley Bank,
Signature Bank.
First Republic Bank has been taken over by federal regulators and sold to JP Morgan.
Second largest bank failure in the country's history.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Guess what? It grows the economy.
We print it digitally, so we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
We're sort of at the beginning of what is going to be the most anticipated recession in probably modern history. Everyone expects the recession.
Our economy is strong as hell.
What is going on, YouTube? It's Brendan for Market Makers. Did you miss me? We had a long holiday weekend here in the U.S. Monday was Memorial Day, remembering our veterans, our military. Guys, we have a lot to talk about in this marketplace, but I hope you guys did take the opportunity to enjoy your weekend. We celebrated Memorial Day here at my ranch the way that you would expect with my military veteran friends. I myself am a military brat. We set up a lot of watermelons, honeydews, pineapples, and we went hunting and blew things up. It was a lot of fun. And yes, we always eat what we hunt. So that was a good time for me, guys. Good stress reliever. But we got to talk about the markets. A couple of big events happened over the weekend, including the debt ceiling tentative deal. Not much really to see here. They basically froze spending, agreed to raise the debt ceiling, raise it from 32 trillion, raise the debt ceiling for the next 18 months. So full steam ahead, more spending to come. I know a lot of people on the Republican side are going to be angry about this, possibly not vote for it, and they're going to pull over from the Democrat side to get it passed. Like I said, I think it's going to end up getting passed because they'll whip up the votes for it, but it's not good for the country. It's not good for the economy, and no real changes, in my opinion, were made in that fashion and that deal. But what else is going on? So NVIDIA this morning just became the 9th company to cross $1 trillion. Really going ham, going all in on this AI bubble. Jensen, the CEO, they're going to be selling more stock to allow retail to buy in as close to the top as possible. So in this video, guys, we're going to go over all these individual stocks that are holding up the market. Look at their resistance levels to try to determine how much higher they can move. We're going to look at our cryptos. We're going to look at Bitcoin. We're going to look at the indices, our metals, and the international indices as well. Big video for you today. Please do like and subscribe. Guys, you want to trade these markets with us or show us some support, show us some love, come check us out in the Discord. SimpleFX and BingX will pay for your first month. You get all of our custom-made indicators by Fractal Trade 15 for free, and you're there for free, so you can try it out risk-free. SimpleFX is a decentralized exchange where you do get up to $5,000 with our link instantly available to trade with in our margin based on your deposit. BingX for you crypto bros, no VPN needed. Even here in the USA, just jump on and trade your favorite Pepe coin, whatever else is trending these days, okay? So we're going to get into all of this. Let's go ahead and kick off the show. DXY, guys. Okay, so DXY, we talked about this pumping up. We hit our key level that we predicted here, going to the 618, getting above it to really 104.5. Need to hold this. You can see it's accumulating this for the DXY to continue to move up. Then you're looking at 104.7 and 105.8. Okay, that's what you're looking at for the DXY, and I believe that is your 200 on top of you. Yes, it is at 105.653. So we'll see if this continues to be bullish. Looking at the VIX, the VIX is doing nothing. It's at 17 because we don't really have a lot of volatility right now in the S&P. But guys, I do believe, by the way, I do believe where these markets get to in this rally, including Bitcoin, the S&P, the NASDAQ, you are looking at the high for the rest of the year. Wherever this rally ends, before it really pulls down, you're looking at the high for the rest of the year, okay? Lee, throw up that chart real quick. Look at this. Look at this chart. So what's holding up the market? We're going to look at it on the S&P as well with the market breadth, do our breadth analysis, as you guys know. Retail investors have piled into U.S. markets this year. I mean, look at that. Look at that line, how it's shooting up. And people say this is the most widely anticipated recession ever in the market history. Well, show it to me in the money. Show me the stats. Look, most people have no idea what's going on. And you always got to remember the statistics. 80% of retail loses money. 80%. And of course, professional money managers over 10 years versus the S&P, 84% lose money. They have no idea what's going on. They buy bubbles, they buy in the FOMO, and they always want to be optimistic to get you to give them money so they can charge you fees. That's the name of the game. And what I love doing on this channel is helping people take charge and agency of their own personal finances. I think that's the future, guys. And I'm really proud of like my daughter's generation because a lot of you young guys trading on these other platforms or just trading for the first time, I think it's awesome because take charge of your finances. It is the best way, in my opinion, to find financial freedom. Let's look at Bitcoin. Bitcoin on a weekly, guys. We did dip below, like we talked about, the 45 angle. Notice how you pump right back up. Look, the shape I think Bitcoin's going to do here. You guys have seen me do this before. I think this is what it's going to do. It's going to be a double top, okay? So what I want to do is look at this on a smaller time frame. I do think there's room for assets to move up potentially a little bit more, but I also think that, this overall with the economy the shape it is, you guys have heard me go down the litany, so I'm not going to do it. Everything is going to make a new low. Everything will make a new low. That's what happens. The market has never bottomed in history in front of a recession. So zoomed out on the daily. Key level to watch, 30,962. That's where Mark in our room traded this. This is where I shorted Bitcoin. And again, these ended up being 13 to 20% drops if you held it all the way down to the bottom. Okay, these are great moves in the market. But what you got to do, guys, see, this is your accumulation range down here. When you hit that 15.5, zoom out, okay? Because the shape that you're making, and I'll show you this on the 3-day time frame. Again, you're on top of your Wyckoff range. Let's go ahead and get rid of this fib so you can see this picture a little bit better. Let's get rid of the moving average. This is what I want to show you here, okay? Let's get rid of the Wyckoff lines here because you're holding on top of that ceiling, which is good for a potential move. But if you look at this, really in a macro sense, you're doing this shape, okay? And this is what I think is going to happen with Bitcoin. But look at this on a 3-day. We'll zoom out so you can see this a little bit better. You can see it taking form here on a 3-day chart, okay? So again, this is what I'm looking at when I'm looking at resistances and supports. You have this massive double top that's forming, and now wherever it finds its resistance, if the markets do not continue to be bullish because it is a bear market rally, you're going to see this fail. So let's just look at some simple ideas here. I want to look at this with a fib retracement from an impulse move here. Let's go ahead and grab this top off that second top. And you look at that. I mean, you hit the 618, 28,407, basically to the dollar. Okay, 28,435. So you hit this 618, and these are the areas everybody knows in my room. My favorite area to look at double tops is always the 786. Okay, geometric trading, part of Kepler's triangle. But that's where I like to find these rebounds. So if I'm looking at this, you already hit the 618. You've shown you can get there, 28,407, and I like the 786, and you'd be doing that type of move. Okay, and then of course you have these waves up and down, waves up and down. But you can already see you had your wave 1, wave 2, wave 3, your ABC, okay? Market moves in threes, law of threes. You're getting a little bit of a rebound here. Another way you can look at this is you can always Wyckoff this in like I just had drawn there, right? On the daily. So there's your selling climax. Here's your reaction. And look where price is. Let me zoom in so you can see this a little bit. You up thrust it to the 618 and you came back down. Now, when you put this back on the daily, you were on top of your Wyckoff range, but as you can see, you're basically right at the line. So again, up thrust, typically you can get a sign of weakness if you don't break out to the upside and you'll retest the base down there at 25,793. But this is what I'm watching for in these markets is these retracement levels, because I think, and we're going to go over this in the stocks particularly because it's going to drive cryptos, I think these things are topping out where they're at. Let's look at the S&P real quick, guys. S&P 4211. We got up to this morning or today's candle 4234. Again, this is an area I'm interested in trading between 4230 and 4289. Building a short position as potentially this could rise up. And if it doesn't rise up and rolls over, which is also a very real possibility, I want to have some skin in the game that I can add to. Okay, so that's what I'm doing here. But let's look at this. So the MFI, we're not overbought. Okay, we're not overbought. You look at your volume, though, your volume ratio, more selling than buying. And the key thing to look at here, guys, this is what I want to show you. Let's get rid of some of this so you can see this a little bit better. These are some of our market makers indicators here. Let's get rid of some of this. So looking at this, guys, this is your market breadth. I have this set to 20. Okay. And this is something I want to show you guys. And a lot of people don't understand this concept, especially if you're listening to guys that are just drawing Elliott wave patterns up in the air. They're not looking at market breadth. They're not looking at cycles. Okay. Understanding cycles and the cycles you are trading in, a cycle of growth or a cycle of decay, bull market versus bear market for common nomenclature, is very important to understand what to look at when you see bullish price action. Just let me paint this picture here. So when you were over here, Monday the 3rd, April 2023, right here in this range, 99% of the S&P 500 was above its 20-day moving average. All the way to over here, 99% was above its 20-day. Where you are now, you have, I think it's about 33%. Let's take a look at this. You have 36, almost 37%, only 37% of the companies as price has risen in this rally up. So price over here was 4143, 4150. You're above 4200, and only 37% of the companies are above the 20-day. Okay. Fast moving trend on a daily, right? Above the 20-day, 2/3 of companies are below the 20. And it gets worse when you look at some of the other moving averages. Let's look at this. So that's the 20-day. Let's look at the 50. What do we have on the 50? How many companies are above the 50? Only 35%. So once again, basically 2/3 of the S&P 500 are below the 50, below the 20. What about the 200? The 200 is your best case here, which you have 41% above the 200. So what does this mean, guys? What does these numbers mean that I'm throwing at you? Understanding moving averages are lagging, right? Moving averages are lagging, but to understand this, as price has risen, you've built breadth divergence. You've built divergence in the market. So over here at these circles, you had 99% of the companies participating in the rally, and now you have only 1/3 of the companies participating in rally. So what does that mean from a technical standpoint? That means your rally will top out. You want the opposite in a bull run. And this is so key to understand. You want this movement, right? You want this movement up from down here at a base level, 25% above the 20, and you get up to 99%. And then you want this rally to hold and grow. And you have the opposite here in your indicator. You've lost 2/3 of the participation since you were in this Wyckoff accumulation range, but you have several stocks holding up the market. I mean, it's absolutely crazy. So this is something you guys need to understand where this market goes. If this does rally up to our 4,300 target at the 1618, 4289, or if it rolls over here, this will be the high for the year when you actually get a substantial pull down wherever this market goes. And so goes the S&P. The NASDAQ is obviously outperforming, but that will be the high for the NASDAQ too. Wherever the NASDAQ starts to really retrace from its high, I do believe that's the high for the rest of the year. Okay. So what does that mean for all of us traders?
Looks like meat's back on the menu, boys.
Meat's back on the menu, boys. And so this is an area I'm watching very, very close, guys. So pay close attention to this. And let's go ahead and look at S&P. So what happens if we fail right where we're at? 42.41. Actually, this is 42.30, which is where price got to already. This is a perfect 886-113, which is actually 1.128. This is a reciprocal ratio. Okay, this is part of geometric trading. This would have the S&P coming down to 3,400 if this is your failure point right here underneath 42.41. This is a perfect retracement. As you guys know, that trade with fibs, this could go a little bit above it, hence upside risk 42.89. And obviously, it could just start to fail whenever it wishes to. Okay, so this is a pattern I'm watching, and that is my pull down target here on the pattern, which obviously could be exceeded or it could be more shallow. This is part of TA and part of trading. My personal target that I have is 31.41. Been talking about this for months and months, give or take 150 points, so 3,000 to 3,300. This, of course, has the pattern completing at 3,400. Okay, so this is what I'm watching, guys. We are in the target zone in the S&P. Let's look at the NASDAQ. NASDAQ on the 3-day chart, doing a fib retracement was extremely simple here. If you just do a simple fib retracement from the all-time high to the low, look at the NASDAQ on 3-day, you are overbought. Look at your volume ratio, lots of buying going on here, okay? 618 from the all-time high, you just got above it, peak euphoria, as you guys know. So you're at 14,438 right now. That's actually, you're at the 618, 14,438. And price is at 14,438. Interesting. Why is that showing below it? Oh, there it goes. It's 1440. All right, so let's look at the NASDAQ on the daily. 14,438 here on the daily. I carried it over. Guys, when I'm looking at the BREF study here, again, this is on the 20-day. Now, remember, the NASDAQ only has 100 companies. Something else to consider in the S&P 500, most people don't realize, half of the companies in the S&P 500 are below their October lows. 250 companies are below their October lows. The S&P equal weight is flat, whereas the actual S&P index whereas the S&P index this year is up, but the equal weight is flat, okay? But looking at the NASDAQ 100, NASDAQ 100, again, you were at 99% above your 20 right here in your Wyckoff accumulation range. And then what happened as price rose up? What happened, guys? You got all the way down to about 50%. Remember, there's only 100 companies here. It's big tech. 53%. So you were at 99. You have divergence. So more companies are doing this movement. They are going down below their 20 as the market price. Remember, the price action, as I told you before, is the bullish element in the market, not the actual fundamentals in the market. Let's look at the 50. How many companies are above the 50? 55%. So basically 50 companies above, 50 companies below. What about the 200? How many are above the 200? 64%. So the nearer term moving at average, obviously the 20 is going to give you the quickest reading here off of a shorter delay of what's actually happening here. But you have companies peeling off on this rally. This rally is driven by the big tech, AI specifically. So watching this area, I'm not interested in doing anything on the NASDAQ until we really see some type of distribution box or something form on a larger time frame. But as you can see, you had a nice pullback here off the morning high already. Okay, let's look at these individual tech companies. Let's look at Google. Gave you this target here last week, 126.48, the 1618. This looks to me like it's building a distribution box. Google had a nice run up off its low, so Google's not going to assist in driving the market higher if the 1618 holds. Okay, right now trading at 125.20, and the 1618 is at 126.48. Look at this is a 3-day chart. Look at the supply getting dumped on Google here in this range. Let's look at this. Well, actually, let's see what our MFI is. Almost overbought on Google. Almost overbought. Last time you were overbought was on your run up to the all-time high for Google. Okay, let's look at this on the daily. So Google does not get overbought often on the 3-day is my point. You were way overbought on the daily. Okay, you're overbought at the 90% level, and then look what you're doing on the daily. You're printing your double top. We talked about this last video as well. You have your double top. You're retesting your resistance. Ultimately, I do think this will fail. Okay, this is going to hold or just above it, I believe. So you're at 126.48. So again, Google's not going to help drive the market up higher. What about Apple? Apple, I circled the key range here, which was 176.39. Now, obviously, you had wicks above it, but the key range between 176 and 180. All of these circles, this is an Apple all-time high over here, 182, north of 182, whatever that is, 182, 183. So this is all-time high. So Apple between 176 and 180, key resistance range that has held since Apple's made the all-time high, okay? So you're back in that range. So how much more help can you get from Apple? I don't think a lot. The one fib at 176, one spot 128 is at 180. So I think Apple will be running out of gas. Looking at it on the daily here, not any type of move up. With more buying here on the MFI. Volume ratio is basically at the median line. This is some algorithmic buying. I don't think retail is piling the Apple. They're piling in the NVIDIA. Look at Microsoft. How much more can Microsoft help lift the NASDAQ, help lift the market? 338 is the 1618. You got up to 335.74, and then you retrace some. And there's your all-time high over here in Microsoft. Again, what was that high? 349. So I don't think Microsoft is going to help that much. Let's look at some of the indicators. Microsoft pushing into overbought here on the 3-day chart, large time frame. What about the 1-day chart? 1-day chart underneath it. But again, this to me looks like you could easily get to the 338, maybe get some wicks above like Apple, and then start building what you're doing on Google, which is a distribution box. Let's look at NVIDIA 3-day chart. Not a lot to show you. Look at this big gap, this big jump up from 316. Not a lot to show you here because it's a 3-day chart. Here's my pattern from the pandemic low to the previous all-time high to the market low for NVIDIA. Look where the one fib is, 409.08. You're above it right now. You actually spiked above it higher today, I think to what, 413? Let's look, 419. Let's look at this on the daily. So zoomed in on the daily. Again, not a lot to show you here, okay? But here's my moving average. I think this is my whole moving average. Yes, it is. Just watching this track here. Guys, NVIDIA, can it go up higher? Sure. It's at the one fib. The 1618 is much higher. Where was that 1618? Oh, I took it off. Let me put this back on. Let me put the 1272 on here as well. It's my next key fib level. And let's look at the 1618. I don't see NVIDIA going to $600, but I think you're going to end up between the one fib and let's see where the 1.128 is as well. Put this back on here. That should give you 447. I mean, I think you're going to be in this range here, which is the same fib levels, by the way, of what? Of Apple and of Google, potentially, if Google gets above the 1618. But looking between fib levels here. So this is what you're looking at here. If the 1.128 at 447, we'll see if this holds. I don't see too much more euphoria coming, especially if the market rolls down. It's already crossed as $1 trillion company. I mean, people are still tracing this as absolutely insane. You see these bubbles, guys. By the way, it doesn't mean the technology isn't real, right? You saw a crypto bubble, doesn't mean blockchain isn't real. You saw Y2K, the dot-com bubble, doesn't mean Amazon, Google, Apple went on to be monster companies. Same with Microsoft. The internet was a real thing. E-commerce was a real thing. But you know what it didn't stop? It didn't stop the NASDAQ from dropping 84% in that crash. So this is just a canary in the coal mine, watching NVIDIA. Not interested in doing anything here, but I would definitely watch it between this 409 and 447. See how much more euphoric the market can get. What is this on the daily? So on the daily, your MFI it's in the bullish territory, so it could still move up, but your volume ratio, look at this, you switch from buying, you're going more towards the median line. So there's fewer people in this paying higher prices. Let's look at some of the other AI companies. Palantir moving up. Like this is a massive pump, and people don't realize this. Look at this Palantir pump. This is 155% off of its low December 27th, okay, of 2022. And just off of this pump here in May, let's just take the May pump because this is an interesting stock because it's a big Reddit meme stock. 105% in May. 105% in May, okay? Just in this month. So when they say, NVIDIA is the biggest pumper, biggest one-day move, is really referring to market cap, how many hundreds of billions it added to its market cap, because Palantir is a much smaller company. Up here at 15, guys, 1618 was at 1430. So what would I do here? I would wait. Look at the volume. You got strong volume on this as well. Again, this is a big Reddit meme stock. You have 4 Sigma candles. I had originally targeted this 1430, but I would wait for this to settle. This looks like it's going to be between 1430, obviously, and the 2058. Obviously, if the larger AI companies start calming down, you did hit overbought in the 90% range on the MFI. Your volume ratio is still strong buying. So you still have the euphoria and Palantir, and why wouldn't you? Because it's a cheaper stock, right? So you can get involved in it a lot less. Retail can get involved in it for a cheaper price. So let's look at the German 40, the DAX. So again, viewing everything basically like a double top in the markets. The DAX is going to follow the S&P. You can see what happened here with the DAX, right? So if we were just to draw this, all you're doing here, you broke out from Wyckoff, you came down with down thrust, you got up thrust, a sign of weakness. If this rolls back down, this is your double top. Some interesting fun facts, not particularly for the people living there, but Germany officially entered a recession. 2 negative quarters of GDP. Why is that important? Lots of my family's over in Germany. Why is that important? Because Germany is the 3rd largest single economy in the world. When you plug it into the EU, it's the 2nd largest, the Eurozone is the 2nd largest economy in the world. That goes back and forth with China, but Germany is the 3rd largest single economy. Again, canary in the coal mine. So what's the DAX doing? You're in a recession. You have high inflation in all over the Eurozone, but particularly in Germany and the UK. So you're seeing the market sell off some. So again, this is the double top concept, guys. This is all this is. This will end up on the daily time frame being a large double top. You almost came up to the 618 at 16.1. I told you I like this at 16.2 at the 786. And you may not get there. You know, if the markets get more euphoric, you may bounce back up. But at this juncture on the DAX, what I would be waiting for is what you're going to see on the gold chart, which is what? The reverse Livermore pivot. To lose this, retest it and fail 15,729, and then potentially come down further. And again, it's going to happen in confluence with the markets, because here in the middle, this could pull back up and then roll back up. There's lots of things it can do. Trade at extremes, okay? Looking at the French 40, I mean, this trade we absolutely nailed. I was so proud of this trade. So if you look at this, let's go ahead and take a trend-based fib. There's our larger double top, as you can see, big double top, right? Gave you that re-entry point right there to get and short this as well. Posted that trade in our Discord. Guys, look at this is at 7,200 now. So this is your 75.30 re-entry right here. And now the CAC is falling down again. So looking at this, you originally were holding support at 72.49. This will come down to 7,000 at some point here in the near future. But let's look at this a couple different ways. I know a lot of people, especially our European friends, we got a lot of European viewers. So they trade the DAX, they trade the CAC. And here's your selling climax, and then your automatic reaction. Actually, I would say that is. So this is what you're dipping below right now. And you want to see if this holds. But if the markets pull back down, what's the S&P at right now? 4206. So you're having the CAC and the DAX sell off. What's Bitcoin doing as I'm recording this video? Bitcoin's down spot 0.9% to 27.7. But I want to see this hold a range, okay? And again, if you just want to do a simple fib retracement off this impulse, this is a daily chart, guys. You're basically at the 46 at 72.07. And if you start losing that, you could come down to 7,100. Okay, so watch this range. Remember, I like to trade on bullish days is when I like to short. Right? You don't short when the market's going down. You can do trend trading. There's different techniques you can do. But in general, you want to short on the pumps, which is what everybody freaks out about. And they're like, oh, you're going to get wrecked. This is why we traded the CAC here, because of the double top shape, because of the market conditions, because of the Fibonacci retracement that we hit. Okay? So just keep that in mind. I don't want to do anything here. I want to see this rebound and try to hit some resistance level, and then you can gauge it that way. So this is what I was talking about, what the CAC could look to do. 3-day chart on gold. Again, another fabulous trade, guys. But we got in here. I got in here. My short was 2058, went up to 2067. You fell through your Wyckoff and you retested 3-day chart. You retested the Wyckoff base 2 3-day candles. And what'd you do? You fell down to the 1943. Now, gold was moving up this morning. Why? Because gold and silver, the metals, are moving with the markets. They're moving with the markets. Remember the GFC cycle. And what happens if the markets move down? Gold and silver, I do believe, will move down. And we have a nice, safe entry point that we talked about for weeks on this channel. But you want to see gold hold 1943, try to come back up. And if it does come back up, all you're doing is this movement over here. Okay. This is what's going to happen with gold. There's your flyer, right? There's your above 2055. There's your flyer. You see that? Then you had your dip down, move back up, and then fell down. This is exactly what you have. Your flyer. Here's your dip down. Let's see where this retraces to, because that's another entry opportunity if it does want to come up some before it gets this nice move down and move down to our lower target. Just off a simple fib retracement, you're retesting your base at 1654. If my theory holds true, you're going substantially lower. We talked about those targets many times. We'll cover them again when we get more movement, okay? But that's what you want to watch here. So if we just want to do a simple fib retracement, let me get rid of this one. Doesn't confuse everybody. And let's see what this could come back to if this was your low. Looking at 2015 and 2038, your 618, your 786. The 786 would be perfect to give you an up thrust outside this Wyckoff range, which then means you could have a sign of weakness. So I've watched 2015 and 786 at 2038 if you are interested in potentially putting some shorts on gold. Let's look at silver. Silver again, we trade this at 26, guys. Excellent trade. And silver is 23 spot 20 right now. So silver's below its 2-year trend line. That's where you're at on silver. Again, I wouldn't do anything here. I would wait to see if silver does what gold may end up doing, which is that exact same movement. You have your double top here, okay? So that may be your silver double top. You see that? And now silver, remember, is more parabolic, more volatile than gold. So you may see some action here coming back up to 24, 27, 24 spot 27 and do some other type of shape, or you just may break down in a line, which silver can also do more often than gold. Okay, so right now you're just trying to put in a base. Nothing for me here on silver, just locking in securely my profits by tightening stop losses. Let's check out some of these individual stocks that have been rebounding, like MSTR, because we got a nice 25% win off of this trade above 333. Am I interested in MSTR? I mean, you could trade these things on rebounds, but me personally, guys, if it came back up above 333, I would be interested. But again, this just to me looks like you're going to end up just making a head and shoulders type pattern. If this, when that loses its support and comes back up, does some chop and does that, you'll just have a head and shoulders. But this is an area, if you're watching MSTR, that you can look at fib retracements off of MSTR. And you got above the 618. So, but that the 786 is back at 318. So at that point, I'm just trading at the extreme. I would just wait. Big nothing burger for me. Heavily tied to Bitcoin, as you guys know, Michael Saylor, and you're basically at the median line of money flow, and volume ratio is still bearish. Tesla. Now, Tesla, the most heavily option stock. Well, prior to this NVIDIA bull rush, I guess you could say. But let's see where Tesla's getting to here. So we can do Tesla a couple ways. Again, we came down to our support. We got a 27% win on this trade off of the 208 entry. 27%. We never lost the 161. This is why I don't trade down thrust unless you back test it, okay? And Wyckoff trading. So let's go ahead and throw this here, and then let's throw here. And you can see this is how Tesla's been moving, right? So here's your down thrust. We back tested a candle and then came back up, and now you're moving back up. So for me, where would I trade this again? If this does continue to rise, I can just take my trend base fib and measure this out, because you have a double bottom structure here that you can look at. But that just puts you back at you see the 1272. I know it's small. That puts you back at 208 and 223. Okay. Well, what was our range before? 208 and 220. So for me, the range hasn't changed. Now, obviously, you're getting some retracement here, but for me, the range hasn't changed. I like to trade at extremes, so I would be happy to wait. And if it did ever fall back down and come down and lose this, I know it's going lower because you got all the way down to about $100, right? Where am I buying Tesla? One of the few stocks I'm accumulating at the market bottom. when the market finally bottoms, not this next bottom, but I do believe we'll have another bottom after that. This next bottom is just going to be a big rally off the bottom. But when the market finally bottoms, I'll be buying Tesla below 60 bucks is my goal. Really below 50 would be my goal, because I have, depending what fib layout I use, guys, I have Tesla going down to $30 to $50. So that's where I'm looking at. First Solar. First Solar, again, we shorted this at 231, guys. Great win. It's still doing nothing. It's in the middle. It's in the heart of this Wyckoff trading range. Down here, it rebounded it. It's going to fill this gap, of course. Shorted at 230, went all the way down to 199. So big nothing burger on First Solar. You want to trade it at peak resistance, or if it loses that range, back test and comes down, okay? That's what you want to do. All right, this is a long video today. Hope you guys enjoy the video. Guys, check out our room. You can message Lee in the Telegram. He'll get you set up. Check out SimpleFX and BingX as well. I'll see you guys on Thursday. Do subscribe. Talk to everybody soon. Take care.